Hey guys, welcome back to the channel where we are selling options until we hit $1 million. Now, I know I've been MIA for about a month now, and unfortunately, I do work a 9 to 5 job that is pretty demanding, even though it is one of my goals to eventually live off of this income. So it's been a mix of things between the job getting hectic, life, and a little bit of travel here and there. So, um, haven't uploaded in a little bit of a month, and it does feel weird to get back on and to be talking to myself again, but I appreciate all of you for tuning in. And while I was gone, we actually hit 100 subscribers, which is absolutely surreal. And so thank you guys. And another thing that is absolutely surreal is hitting a new milestone on this account. Over a lot has happened over the past month, which I will update you guys on in this video, as I'm sure a lot of you guys have been tuning into the news. But there my account surpassed $300,000, which is absolutely surreal. I mean, I remember when I hit my first 100K 2 years ago, and then hit my first 200K 8 months ago. I mean, those were just milestones. I'm just in awe. I open up my account and I look at this number, and it's just insane to me. A lot of hard work went into this, and a lot of, just tuning my strategy over the years and getting more familiar with the wheel strategy. So absolutely just amazing. I can't describe just how happy I am to see this. But we'll see if it sticks. There's a lot of you can't get attached to a number. As you can see, this year to date has been pretty volatile. So there are ups and downs, but April has been an absolute rip. I mean, out of 17 days, only one red day here in about a week ago. So that's not normal. You shouldn't get used to log into account and like this Friday, April 17th, up over 3.1K. You shouldn't get used to that. But the market has been an absolute rip. So congratulations to everyone if you've bought the dip. But as I'll get into later in this video, there might be another opportunity to buy the dip soon here with Iran war escalations up again. So kind of a long intro. Getting into the numbers. Coming in from a strong year, as a reminder, 2025, we were up over $42,000 or over 15%. And then 2020, which I did also pay taxes on recently, which hurt. I actually had to withdraw money from the account, and I couldn't contribute any money this past month to the account from my W-2 9 to 5 job. So this over 300K is pure stock gains and interest income. So even though that hurt, still really happy to see that it's paid for itself multiple times over what I paid. So 2026, we are now up over $12,000 or just over 4%. I believe in the last video we were down 4%. So the past month, absolute rip, a little bit over $30,000, which is crazy. That's a brand new car right there, or 10% that the account has grown, and that one little 1% on Friday, that 3K. So getting into it, what's been driving the account, and I really haven't been active too much on selling. I've been holding a lot of cash, but have realized a little bit over this past month, which the main one I should say is Credo Technologies, which we'll get into later in the video. But we actually sold 75% of our position of shares, a little under $6,000 realized on there. SoFi puts got assigned on some more SoFi puts, slowly drilling down on the cost basis, getting that lower. I think SoFi is gonna do fantastic here in 2026, and their earnings are actually coming up. But 272 on that. Flex, which is a new one that I've been eyeing, 97. Talon Energy, a little over 1,200, and then some covered calls that we've been doing on our current holdings, Palantir and Robinhood, collecting a little bit of cash here and there. So from realized cash in the pockets, ready to deploy again, about $7,500 realized this past month. So again, what is this journey? What is this strategy? This is the wheel selling option strategy, where you start at the top and you're selling put options, where you're writing one contract at an expiration at a strike price that you would like on a high conviction stock that you don't mind owing. So if by that expiration the price of the stock falls under your strike price that you sold the put at, you have to buy 100 shares. And here's an example of that on the right here with Flex. Sell to open, I do monthlies. I collect here on this example $132.35, but I have to put up at the $60 strike price, but I have to put up $6,000. So in 1 month, I collect about $132 for every $6,000 in collateral. So let's say by expiration that goes under the 60, the stock is trading under $60. I will have to buy 100 shares of Flex at 60. So I would have to buy $6,000 worth of Flex, no matter where the price is, if it is under $60. So then we turn it around and we sell covered calls until the stock rises past that strike price at that expiration that we sold at, and the wheel continues. And again, as a reminder, this content is not financial advice. Please consult a licensed financial professional before making investment decisions. So going into the news this past weekend, actually, here, the last month, this is, I think, day 52 of the U.S.-Israel-Iran war. And in the last weekend, there's been some volatility going on, a lot of news. Last week, there was a ceasefire agreement and between the U.S. and Iran. The Strait of Hormuz opened, and then Trump decided to block the Strait of Hormuz with his own navy. And then there was a ceasefire with Israel and Lebanon, a 10-day ceasefire. And then just this weekend, breaking news that the U.S. struck and seized an Iranian flagged ship called Tuska in the Gulf of Oman. They blew the engine up and boarded and seized the ship. And this is escalating because Trump does not want any Iranian ships passing through the strait until they get a full peace agreement, not a ceasefire. So the U.S. Navy is blockading the strait, and that's creating a lot of tension, a lot of eyes on what is Iran going to do next. Are they going to break the ceasefire and start attacking U.S. bases again, or Israel? So Dow futures dropped 400 points currently, and the Iranian war tensions are escalating. So all eyes on that. But this creates a buying opportunity. I mean, I'm sitting on a lot of cash right now. So we'll see where the volatility takes us this next week. And then the meme of the week, kind of the Strait of Hormuz. I found this funny. Somebody posted this. It gets blocked, it gets unblocked, and someone posted the hours that it's open and closed. So just a funny meme to show that maybe making fun, even though it is a serious situation and all that, but just making fun of the ships who are passing through the Strait of Hormuz, that they don't know whether it's open or closed. They should look at the Google review. I wonder what that is. 5-star. I mean, amazing, perfect review of the Strait of Hormuz. So just found that kind of funny. So going into what has been going on with the portfolio, this has been what's driving the account this last month. Credo Technologies. As a reminder, this is a company that manufactures and installs high-tech components into data centers. All these data center build-outs need high-tech cabling that Credo Technologies offer. They recently actually bought another company. They do other components for data centers as well, but their main source of revenue is their cables that take less power. And if you know anything about data centers, is these companies are trying to maximize how much, make as efficient as possible how much power they use. So if you offer cables that use less power than traditional fiber optic cables that are shot with lasers, and they become heat, and that heat loses energy, Credo Technologies offers an alternative solution that connects to all the switches in the data centers. And due to the availability of power, these AI data centers just eat it up, and they buy a lot of it. So this company has grown their revenue 300% year over year. The premiums are high. I bought at the end of February here, beginning of March, with the green arrow down here, and the stock has been ticking down. I mean, it ran up a lot and it ticked down, but now there's been a huge resurgence with the news of them acquiring from their strong balance sheet, fully in cash, a company for I think like $700 or $800 billion. So the stock has had some nice momentum. And this is a screenshot that I took before selling, I think on what is that, Wednesday or Tuesday. we were up over $10,000 or 43% for holding the stock two 2 months about. And we got assigned, we sold two puts back at the end of February expiration at 125. So got assigned on both here. So we still own, or we did own 200 shares, and I sold 75% of that, or 150 shares. So still holding 50 shares to see if the stock can run up a little bit higher, but sold off 75% of the position at near the all-time high. So right now it looks like a good sale. I'm happy to take 75% off, but letting the 25% hopefully run a bit higher, hopefully back in the 200s. So keep an eye on that, but the RSI is very overbought and has had a slight pullback, but there is some strong there's a lot of buyers and the support zone here whenever it goes lower than 160 in the high 150s. But keeping an eye on that. Hopefully, the last 25% will run. Talent Energy. This is a utility play. This is, I construct my portfolio around macro themes. And the big macro theme this year, and then, well, these last couple of years, and the next couple of years, probably the same, is the data center build out. And what they need is power. And Talent Energy is a huge, massive corporation that is in the power space, supplying power and building out the grid to these AI data centers who take a lot of energy and electrons. So unfortunately, I did not get a sign on Talon. I was kind of hoping I would here. The stock did dip below the strike price on the day of expiration here in early April. But I did not end up getting a sign, and I kept the full 1,200 of premium collected for the 1 month hold at the 320 strike price. Why I hope I got a sign, because the stock has ran up this last week, like with most of the market. So that would have been, about 4K additional if I had sold. So, unfortunately, I didn't get a sign, but, still happy with the premium that I received. But looking to get back in the stock if it drops back near the 330s or 320s levels. I would sell a put at around 300 or 310. So keep an eye on Talon Energy. SoFi Technologies. I have been lowering my cost basis on SoFi, selling puts. Their earnings are coming up. So in the last month, I did sell 2 additional puts, realized $272. And our cost basis I got a sign on both, and the cost basis has gone down to about the $18. And now the stock has had a little bit of a run up this last week. It still has a lot to go to get back in the mid 20s and potentially the 30s. But we are green on both our SoFi positions here. The stock has, it has tanked since I started selling puts here. Not because it is a bad company, but because there's been accusations that they have been cooking their books a little bit on the financial side. How credible is that? We're not sure. Really, only the insiders know. But there is that rumor that's been driving the stock price down, as well as crypto prices down, which has affected SoFi. They are a banking company, but they also offer student loans and multiple other avenues of revenue, one including that has to do with crypto and crypto trading. So they do get affected by the stock price if the major crypto coins are down. But there's been a nice run up this last week. So TBD on their earnings that are coming up. How will they show on user growth? How will they show on margin improvement? I mean, all these factors I'm keeping an eye on. So we'll see. But I do think the stock is a $20, $30 performer in the next year. So keeping an eye on that. Now, going into current portfolio, Nucor Steel. This is a stock that I have been assigned on over a year ago. It is going into long-term capital gains tax bracket here when I sell. It hit an all-time high. We're up over 20% on our 100 shares of Nucor Steel. This is the largest steel manufacturer in the U.S., responsible for making steel mills all across, building out all these these domestic manufacturing plants, as well as going into cars that are made in the US. And of course, the AI data center shells take a lot of steel, and this is the company that produces it. It has steel is very cyclical, so it did, up until last summer of June, it was on a downtrend since I got assigned, but just from June, it's been on a pretty steady uptrend. Where recently it broke an all-time high, so up over $3,300. RSI showing overbought. The earnings are also coming up, but I think the stock is will go into the 200s. It barely broke the last all-time high, so we'll see how it performs this week, whether this will be a double top and we'll see a pullback here, or if it will continue the momentum and go into the 200s. But I am looking to sell around the 205 or 210 area, depending on how the stock performs and price action. But it's been on an absolute rip, and happy to see and happy to let the stock go and deploy that capital elsewhere, since we are up over 20% in a little over a year. Now, Constellation Energy, this is a stock that has not had the run up as its counterparts in the utilities and power generation space. Constellation Energy is the largest nuclear operator in the US, but also that is just one part of their revenue stream. They also do power generation in and supplying the power to all these AI data centers. But the people expect very high growth from this company, and it has really not met that in the last quarter. But their earnings are also coming up, so we'll see how they perform. But people expect insane growth and new deals with all these hyperscalers like Amazon and Microsoft for new power deals, but they really haven't announced any of that recently. So that goes into skepticism on if the AI growth can continue and if they'll see what people are expecting, if they'll meet what people are expecting. But also some headwinds into Constellation Energy is actually they're decommissioning US nuclear plants, and it will take installing new nuclear projects that will take a long time to develop. So that's also a little bit of headwinds for the stock as the largest nuclear operator in the US. But I still believe in it long term. I think their financials are pretty strong. They do have pretty high debt and high capex, of course, but they I believe in the management, and I believe they're handling to expand the company. So this is a growth play, but it does get affected, unlike other utilities, by AI demand and the growth story there. So that is a risk. We are down a little over 8%. We got assigned on our $325 put, RSI mid 50s, so is not in the overbought or oversold territory. And we did hit positive here in March. We were a couple percentages up, but TBD on if this stock can recover past the 325 cost basis that I have and go touch the 400s again. So keeping an eye on Constellation Energy. Now, Palantir Technologies. So you'd think with the war and all the government contracts, Palantir would have some nice tailwinds behind it for the usage of their software, but mixed in with the war, which is bullish for Palantir, it is also market fears over Anthropic and how AI will replace their software. But in reality, I think these fears are just so overblown. No AI can replace the curated Palantir Technologies who have government contracts, and I don't think the U.S. government, at least anytime soon, will trust a random AI tool to replace this. So I think these contracted revenues long term are going to continue for the company. It is trading at a higher PE ratio, so people are expecting high growth, but I think they're going to continue to meet. So also eyes on their earnings that are coming up. But I think the stock is going to go past our $160 strike price and back into the 180s this year. So TBD, looking on that, down about 10% or $1,500 still on Palantir. Now, Robinhood has struggled. One, crypto prices. Robinhood is a trading platform brokerage that allows crypto trading. So if crypto prices are down, people are trading less. That's a headwind. But a tailwind behind it is their prediction markets. I think that prediction markets are going to be huge. I mean, from the Super Bowl this year, just the statistics that have come out on how many people are betting on all these like Kalshi and all these other Polymarket, all these other prediction market platforms. I think Robinhood can easily take some of that share and drive a lot of their revenues from that. From ordinary, people that like to sports bet or just bet on whatever they like. I think this is a huge new revenue source that hasn't really been shown yet. So I'm eyeing their earnings that are also coming up. I feel like every stock's reporting earnings, but hey, earnings season is coming up in the next month. Still eyeing Robinhood to see if they will on their earnings say anything about those prediction markets, but also they've had a run up this last week because of crypto prices. So cost basis in the low 100s. We own about 300 shares, down 12% or 4K, but I think this stock can easily run over the 100s and back to the 120s, 130s this year. The short term momentum is not looking good with this rejection from the 90-day SMA on the latest close on Friday. It ran up to, about 90, 93, and then got rejected from the 90-day simple moving average, that blue line right there. So we'll see if it pulls back right now, goes back to the low 80s, fills maybe one or two of these gaps, and then continues the run up. But again, depends on multiple factors, including the price of crypto like Bitcoin. And speaking of Bitcoin, a little bit of a run up these last couple days. It's been going, broke through the 90-day SMA, still in a long-term Dow trend, but this could be the start of a recovery here. Maybe not. It's hard to tell right now, but we'll see how the price action reacts over the 90-day SMA, whether that will serve as a support. But right now, it's broken into a new high since February of this year. So it did touch that $78,000, $79,000 mark. It hasn't broken 80,000 since last February, but keeping an eye on Bitcoin, I think it can make a run now, depending on macro news and if there is a ceasefire. Excuse me, not a ceasefire, a peace deal made with Iran. I think Bitcoin will have the momentum it needs to run. But right now, trading around the $75,000 mark as I'm recording this on Sunday, April 19th. RSI is 57, so not quite in the overbought territory after this pullback, but it did hit, in the 60s. So keeping an eye on Bitcoin. We have about 9% of our account now. One, because our denominator grew, the total net asset value of our account. And also because crypto prices went down. As a rule of my portfolio, I try not to do 10 to 15% of the portfolio in a single asset. But in Bitcoin, we are trading two, which I just count together. We're trading BitX, which is a 2x leverage ETF, which you really have to be careful for because you can lose a lot of money. So a very small position in that. And also iBits, the iShares Bitcoin ETF, which has an expense ratio, but overall mimics the price of Bitcoin and is tradable on all brokerages or most brokerages. So we are deploying a little bit more capital on this pullback this week. Since we are at that 9% of the total value, I could sell a few more puts on Bitcoin, which I wouldn't mind getting my cost basis down if assigned. So do that on BitX or do that on iBit. I still have to decide for myself, but I will look at the price action of Bitcoin. So that is about it on the portfolio. We are still negative about 12K open P&L, but we are sitting on a lot of cash. We're sitting on over $113,000 of cash, or 38% of my account. A few notable plays that I did not go over during this video is COPX. COPX is a copper ETF that I'm up $80 or 37%. As a reminder, I do close at over 50%. If the timing makes sense because I sell monthlies. If it's 2 weeks or under over 50%, then I sell. CRDO, these are the last 25 shares that we're holding, up 36% or a little over 2.1K. Fast, they had their earnings, had a drawback, selling two puts there, up 16% or $34. That was bought on Friday. NU is another steel stock, up 48% or $66. Just a couple puts there as well. Pfizer up 64% or $32, expiring May 1st. So I think I'm just going to hold this one till expiration, but not a lot of collateral, small play. Wanted to get a little bit less beta in my account. And yeah, beating the bond indexes. I'm not betting the S&P 500 and Dow Jones, just trailing slightly. Dow is up 4.47, or S&P's up 4.47, and Dow's up 4.92, while our account is 4.11. But catching up, I hope to start beating those indices soon. So that about wraps up this video. Thank you guys for tuning in. We are 30% of the way there, but we'll see if this holds. This might be another pullback week with the Iran tensions. I will update you guys next week. Thank you guys for tuning in, and good luck trading.